Hello, and thank you for joining us today to talk about the topic of Roth conversions. My name is Kathy Crunden. I'm the Executive Director of Align Wealth, and here joining me today are two of my colleagues.
Hi, I'm Jane Voorhees. I'm the Director of Planning for Align Wealth.
Hi, I'm Gina Grupo Martinez. I'm a financial advisor here at Align Wealth.
So let's talk about Roth conversions. So the topics that we're going to cover today are traditional IRA versus Roth IRA. What is a Roth conversion? Why do a Roth conversion? And some potential drawbacks. So let's start with traditional IRA versus a Roth IRA. So some of the differences between a traditional IRA and a Roth IRA. So for a traditional IRA, you get a tax deduction when you contribute, but you pay taxes when you take it out. Whereas a Roth IRA, you get no tax deductions when you make the contribution, but your account grows tax-free. So it's really a decision of paying taxes now or later. And remember, in both the traditional and the Roth IRA, your money grows tax-free when it's in the account.
While almost anyone with earned income can contribute to a traditional IRA, there are income limits for those contributing to a Roth IRA. So for 2020, if you're married and filing jointly and your modified adjusted gross income is below $206,000 a year, you can contribute to a Roth IRA. For single and head of household filers, if your modified adjusted gross income is below $139,000 annually, you can contribute to a Roth IRA. The maximum total annual contributions for all your IRAs combined is $6,000 if you are under the age of 50 and $7,000 if you're age 50 or older. The withdrawal rules for Roth IRAs are generally more flexible than those for traditional IRAs. But if you don't meet certain requirements, you could end up owing taxes and a 10% early withdrawal penalty. Basically, for Roth IRAs, you can always withdraw your contributions with no taxes or penalty as you already paid taxes on this money. If you're 59 and a half or older and your Roth IRA is at least 5 years old, you can withdraw contributions and earnings, which is your growth, with no tax or penalty. For those under 59 and a half, or those who do not meet the 5-year rule, taxes and a 10% penalty will apply to earnings. You may be able to avoid the penalty, but not the tax, if you have qualified exception. A couple of examples of qualified exceptions are disability, qualified education expenses, first-time home buyers, health insurance premiums while unemployed, and unreimbursed medical bills. So with a Roth, you can leave the money in as long as you want. With a traditional IRA, you must begin withdrawals at age 72. These withdrawals are referred to as RMDs, required minimum distributions, and taxed at ordinary income tax rates. Therefore, the strategy of converting a traditional IRA to a Roth IRA can make sense in many different situations.
What is a Roth conversion? In its simplest form, a Roth conversion is changing the classification of your IRA from a traditional IRA to a Roth IRA. The federal government began allowing this practice in 2010, regardless of the amount of money that you earn. Why do a Roth conversion? There are a number of advantages to doing a Roth conversion, and we're going to talk about them next. First off, we have the legacy transfer. This allows an IRA holder to leave their heirs a tax-free inheritance. So if the IRA holder does not anticipate having to draw on the funds and they have the funds to pay the taxes, then converting their IRA to a Roth IRA allows them to leave their heirs a tax-free inheritance. That's a really nice benefit for your heirs. Although the beneficiary will have to deplete the Roth IRA within 10 years, the taxes have already been paid, so there's no taxes due. Inherited IRA versus inherited Roth IRA. So the Secure Act eliminated the ability to stretch your inherited IRA. Previously, beneficiaries could stretch the required distributions over their expected lifetime. But the Secure Act that was put in place on January 1st eliminated that benefit. And now inherited IRA beneficiaries have to take their distributions within a 10-year period. So that could lead to a high tax burden if the beneficiary is already working and earning income.
Tax-free withdrawals versus taxable withdrawals. Once you convert your traditional IRA to a Roth IRA and pay the taxes, you will have a tax-free pool of funds to access after a 5-year holding period. Prior to this, you may be subject to a 10% early withdrawal penalty. Non-reportable income of withdrawals. Since RMDs from traditional IRAs beginning at age 72 are taxable as income, this can potentially push you into a higher tax bracket, which may affect your Medicare premiums, your net investment income tax, and your tax credits. Roth withdrawals are not taxable, so they do not add to your reportable income. Low tax rates. The COVID relief measures are adding to the US budget deficit and national debt. This increases the likelihood of higher tax rates in the future. Converting a traditional IRA to a Roth IRA now may reduce the taxes you would pay in the future.
So there are some potential drawbacks that we need to be aware of. With any financial strategy, there are pros and cons. Some disadvantages of a Roth conversion can include considering the tax implications at the time of the conversion. You may be in a high tax bracket. You may not benefit if your tax rate is lower in the future, in which you would pay less taxes. If you have multiple IRAs, converting to a Roth IRA can become more complicated and require expert tax advice. Or if you do convert, you may be penalized if you need to draw the funds in less than 5 years and you're under the age 59 and a half. So there are things that you need to consider. So the Roth IRA conversion can be a very powerful tool when it comes to your retirement planning. However, weighing the pros and cons is important, and you should consult your financial advisor or your tax accountant to see if this is right for you. So if you need help, please feel free to give us a call, and we're here to help guide you through it. Thank you very much for your time.
Thanks for joining us.
Thank you.